Hello everybody, today is the 20th day of January 2013. Welcome to this video, Silver Market Corrections, and we'll be comparing current corrections with past silver ones. Now in the past there has been 5 significant daily time frame corrections that have occurred within a bull market. 4 of the 5 have resulted into breaking past resistance and, of course, resuming the uptrend. One, of course, failed. That was a big one in 1980. So therefore, let's take a look at them, starting with the most recent one. And let's bring that up now. We're going to be comparing in the green, the current correction, which has been majorly sideways. That's going on from October the 26th, 2010, to the most recent levels of January the 18th, 2013. And that will be the case for every single one of these charts, because I'm going to compare this time frame with all the other 5 previous ones. And the last one was in 2008. Now, when we look at what got us there, you're going to see a lot of these are very similar, where you have this little uptrend and consolidation pattern on both of them, and then they both have nice levels higher, as we see there. This congestion pattern, pretty much the same. And you can even just go on small details. You get this small retracement, very much similar. And then this little area here, congestion phase, a little bit of a larger pullback within this current correction. And then in here, the current correction didn't pull back as much as it did in 2008. So a little bit of differences here and there, but you can even see in this little area here, it's still looking fairly similar, to say the least. And it still has been a longer or a shorter correction so far than it was within this, because the breakout point was here, and that would take us a decent amount of time. This is a 3-year phase, so that would take us to, well, basically October of 2013 to match the time frame within this. But that's the first correction. Now, the last one occurred in 2006. And before we get there, let me just explain these numbers on the right-hand side. This price is high divided by the, or the current price divided by the high. So if the price right now is 30, we got a high of around 50, technically 49.81, then I would get 0.6. So 0.6 would be about $30 an ounce, basically. And that's just on a logarithmic scale to compare different price values very easily. So what percentage of the value from the top has it held on to? That's another way of saying it. So right now, we're holding on to 64% of what we originally at when we were at 50. Okay, so now let's compare it to 2006. And I'm going to have to open it up in here. Here we are. This is the comparison with 2006, and we're pretty much barely break past that time. But anyway, the similarities on this up run is fairly staggering again in here. Now the big difference comes within here. And if we would have, say, for example, go back to where we were when we came up to 40, came back here, if we did the same thing that we did in 2006 time frame, that would be like going back up to the 40s and then really staying in a range of about 40 to 47, 46, and then finally breaking past resistance. But with that being said, a deeper pullback and longer for sure. Comparisons amongst here and here, fairly the same, but you can see there's a big divergence here, this in that downtrend and this in its opposite trend right now, which is upwards. So that's the second correction. The last one was in 2004. So let's compare that one now. And that one was very quick. So now what we're seeing is, if there's a pattern, the 2004 correction was quicker than the 2006, or 2006 was longer, and 2008 was longer than that. So if this one's going to be longer than 2008, you can't expect resistance to break until into 2014, if, of course, that plays out. Of course, there's nothing stating that it will. Uptrend, not really so comparable, to say the least, but It just mainly shows the sideways consolidation pattern that it was in. So now this takes us back to the 1970s. And that was the longest successful correction that we had. And this is the extent of it. From 1973 to 1979. That's close to 6 years before it had a clear break above its resistance level. Its move was straight up that led us there. In fact, straight up with really no pullbacks, where back then there was a little bit of pullbacks in here, but really nothing along the way. However, although the movements on a day-to-day level might be a little bit off, it's still very, very comparable, to say the least. And this one gave amazing insight within these higher lows, stating that this was really going to break out nicely. The gold chart actually had a formation looking like this many months ago, and it sure enough did the same sort of thing within its time frame as well. But not every pattern is going to be looking the nicest. However, if we were to do the same thing, we would be pretty much staying in this type of consolidation pattern, which would be like 30 to 39. And that would take years and years and years. Well, last one took 6. That would take us to 2016 if it took the same duration of time. Okay, so let's take a look at the failed one. Actually, before we do that, I want to show you how much this thing really did break out, because this thing actually goes to here. It went a lot higher. So let me just show you the size of the move that took place on that break. It kept going and going and going, basically going, from 1, it went up to 2.75, basically almost tripling its value in a short period of time. When markets are in bull markets, at least silver anyway, it can really accelerate fairly fast. Okay, so now onto the failed move. And this was the one that occurred in 1980. The run-up, this one was a wuss. Ours was the one in 2010 was a wuss compared to this one. And the retracement is acting just a little bit different. But what I like about what we're seeing now is that we have not seen a clear break of 25 below silver. Something I've been talking about for, well, about a year or so now plus. And when we had this situation here, yes, the extra volatility says the pullback's going to be bigger. That's normal market fundamentals. But when you made this lower high and then broke down below support, that was a lot different, to say the least. As if we were going to hit $25 silver, why didn't it break support here or here and then come and make that low, sort of like it did in 2008, happening very fast, breaking to the next leg lower? So ideally, what I think is most likely going to happen is this thing is going to start playing within an uptrend. I don't think we will see this level again, although it very easily can. I think the lows are probably in to the degree where it would take some time to get back up to this level in here, and probably even stabilize further, maybe even extend a range, something like that. In conclusion, these retracements that we see within silver are very much normal. At least within the past, it has been normal. We've seen a lot of these breakout cycles just go straight up on so many different fronts. Pretty much every single comparison that I've showed you, when it breaks up, it hits that top period, it just goes straight up. And people in 2010, 2011 were saying it was going up so fast. And maybe it was. But we've now been experiencing a correction that is almost 2 years old now. And we can see that it can take less than 2 years. Obviously this one, well, no. We can see it takes multiple years, 1975, the mid-70s. That was a long, long correction. But boom, once it breaks out and it usually goes straight up. So thank you for tuning in, and have yourself